Morning, Will.
Good morning, brother. Just like that, we are live. How you
Weird.
doing?
I've been good, man. Well, sick, actually, to tell the truth. But hey, what happens you're in the airline industry. What happens if you don't get an on-time pushback?
Um, Depends on the circumstances.
Really?
Really, I mean, typically nothing.
Mm,
It's things happen. I mean,
mhm,
it can be anywhere from some late check bags. Um, it can be ground doesn't let you push because there's traffic back there. There can be any number of things. It would have to be pretty egregious and like on you personally, and not job duty related.
mhm,
Before anything happened. And even then, uh, it's gonna have to be a pattern of behavior.
mhm.
I mean, that's one thing I'll give all the airlines, especially on the pilot side. We're grown ups. They get it,
Good.
you know. So,
Because as passengers, we don't always get it.
no, well, and that's a whole nother length of discussions. I'm late because, okay,
Well, I like when the captain comes on. It's like, hey, we need to add some more fuel, or
hmm
okay, I can get that, or
yeah,
because we're going to have to divert over a storm. Now we're going to have to again in this one, add fuel, or like you said, they got lake check bags coming from Des Moines,
Des
Des
Moines,
Moines. Sorry.
yeah, yeah. It is French, and I cannot do a French accent. And I will not torture you with my rendition of a French accent.
I remember when you
Um,
tortured me with your Southern accent, man. It was, whew.
the uh so you're talking about that stuff. I have been on in the back and worked flights where we've known we were going to get someplace early and maybe TSA's really backed up for some reason. We'll wait an extra 5 or 10 minutes
Really.
because we know we're going to make it up en route.
Hmm.
Maybe the flight's normally scheduled for 2.5 hours and we know we're going to underfly it by 10 minutes because of favorable winds or what have you. And so we'll wait, 5, 10 extra minutes for some folks to get through TSA.
Let me ask you, since we're on this thread and I'm enjoying the hell out of it, we've never really talked about this much. I was on a flight, and I mean, we got there considerably early. Like
hmm
maybe as an international flight, we maybe got there like an hour early, and they're like,
hmm
"We have strong tailwind, guys, and you know, here you go." Is that
Strong
possible?
tailwind, or say if you're going, west in the wind, or say you're going, I don't know, somewhere on the East Coast to somewhere on the West Coast, and the winds are a lot lighter than normal. I mean, I've seen as high as 150 knot headwind. It's very unusual, but it's there.
Mm,
And if say that day, usually say normally you plan for say maybe 100 knot, 70 knot headwind, something like that, and that day you've got 20, you can make up a bunch of time on a 4 or 5 hour flight.
because you planned for the 150. Is
Because
that
you
what you're
plan for
saying?
the average. The schedule is
Uh,
built around the average winds. And so if the winds are, if you're going into the wind and the wind is a lot less than average, or you got a tailwind and it's a lot more than average, you'll make up that time. There's also when it's go home day, I've been known to burn the paint off an airplane or two.
good. Hopefully, I'm on that one when you're like, "Let's get it done,
I'll,
boys."
I, I've told people it's your lucky day because we're going to get there early because it's 6 days on the road and I'm going home.
Did I tell you one time I got on a flight? I think I was flying back from Vegas, and I'm sitting there, staring out the window, and this somebody says like, "Good morning, Captain," or something like that. And I'm still looking at the window, and he leans over the captain. That's like, "Who told you?" And I'm not in uniform. He goes, "Hey, Marine, who told you could be on my flight?" And I'm like, I didn't recognize the guy, but it was I had taught him a class like a week before,
Okay.
and he just happened to be, the captain of the airline. I
hmm
totally forgot told me he was a pilot. It just happenstance, but it was pretty cool.
Yeah. Yeah. There's some cool little things. I was walking through an airport and ran into my neighbor.
Hmm.
Down the road a ways, but one of my youngest son's best friends from high school there. They wrestled together and I'm walking through the airport and I'm like, that looks like that is.
I
So
used to do that.
yeah.
I Monday and Fridays, I was always in the Atlanta airport, always, because we were just the Southeast and we always flew Delta. So you're going to come in and out of Atlanta, right?
hmm
And so I saw people all the time. One time I was leaving New Orleans, and the guy ahead of me, I should have said something to him, but I looked down and he's got his uh, carry on, and I lived on Bostic Circle, Beaufort, South Carolina. I looked down and he was like, I was 71 Bostic and he was like 43 Bostic.
Oh, cool.
What's the freaking odds? I don't know
Yeah.
you. I've never seen you in the neighborhood before, but you're right in front of me and we're in New Orleans.
Yeah.
But anyway,
Yep.
that's not why Alan Kelly showed up this morning.
It's not.
It's not why Will Rhodes is here.
It was to admire my salon quality hair. That's what it was all
Gorgeous.
about. Yeah.
And Matt
Good
is
morning,
on
Jim.
from Tulsa. Good to have you guys.
Good to see you guys. All right, let's dive in here. We're gonna go back. I'm gonna skip the stock market indicator this week. Next week we're gonna do price to equity. It's a little bit deeper conversation. Also, the value of that and how it's really become less relevant over time until it's gonna become relevant again. So that one's gonna be a little longer conversation. There's some stuff in here I started kind of tripping across, going, I think this is worthy of some time. So we'll start with our typical CNN fear grade indicator up top there, 54, slowly edging up. Really, unless something gets in the way of this market, brother, it's just going to keep grinding up.
Yeah.
Okay. And we're going to talk a little bit about that next week as well. I am firmly in it's going to grind slowly upward until something really happens. Because money is flowing in, people are feeling good. Team Red is feeling pretty darn good, of course. Team Blue, they may not be feeling good, but they're still putting money in their 401k and they're still employed and they're still putting money in their IRA. And as long as the money flows into the market in sufficient quantity, the market's going to go up.
Morning, Michael.
Good.
That's odd because what are we on day 4 of the government shutdown?
Yeah, but isn't this like the 414th government shutdown in the last 2 months? I mean,
The only thing that's different this time is they haven't passed, and I may be butchering the language, but a continuing resolution, at least to get the military paid.
okay.
So I've read reports at like Fort Drum and Fort Hood where Army families are lined up to get freaking, free food pantry items and stuff. This is not sustainable for an E3. They don't make that much money. And for them to not get paid, I mean, this could go sideways quick if this goes on for weeks or months.
Okay. I was not aware of that. I do know a young man I know is in the Navy and he uses Navy Federal, and Navy Federal said, we're gonna keep giving you money and we'll make it up on the backside when they when they pay you guys.
Yeah, there's several different nonprofits. Navy Relief Society, I had to use them one time. The Marine Corps had overpaid me in small increments, and then they decided, oh no, after 2 years in, we need to get that money back. We're going to give you 2 no pay dues in a row.
Oh,
Now I'm 19, me and Miss Lisa, and we weren't prepared for that. And we had to go to Navy Relief Society, and they, like you said, they gave us some checks to help keep the light on. Of course, you pay the money back, but
right. But at least you get to do it in digestible chunks.
correct.
What's Alan Kelly say there?
Hey, I flew several times on a fugitive pickup squad. Just about every flight I ran into acquaintances on the flight or at the airport. Small world. Yes, it is indeed.
It is.
I was in Jerusalem, and I'm sitting on a bus heading back to Haifa, which Michael spent a lot of time in Israel. He'll recognize that. And that bus run, and I heard a thick East Tennessee accent. I'm like, I literally stood up, walked back there. I'm like, where are you from? He's like, Smyrna. I'm like, that's where my wife's from. I'm like, okay. It turns out he used to date my wife's sister. I mean,
oh, cool.
The world is a small place.
It really is. Yep. That's go back one there, brother. The airline I used to work for used to do prisoner transport stuff back in the 90s. Mm-hmm. And those were fun to do. So he said that was all that was on the airplane.
Oh, really? Okay.
Yeah, that in U.S. Marshals. So, on one side, I'm saying this market's going to keep grinding up till something happens. Which honestly, unless something pops off, the rest of this year for sure, I would say just keeps grinding up. Now, if we get fill in the blank, something happens between China and Taiwan, Russia, Ukraine really goes crazy. I see they're bombing cities in Ukraine. We're very close to the Polish border. This morning, I just saw the headline: NATO scrambled some jets. Mm-hmm. So, barring something like that, though, I think this market just keeps grinding upward. That said, one of the things that I look for in market indicators is when there's a divergence between things. And that's what our bottom chart is here. So this is the Conference Board leading and coincident economic indicators. Your black line there is your leading indicators, and your orangish line is your coincident indicator. And you can see you got a divergence here, brother. The
See
leading
that?
ones are going down, have been going down quite a while. And you can look back, those gray vertical bars are recessions, and the leading indicators lead, as they should, a recession. So, and this one's a pretty big divergence. I mean, the last one that was this big was really the housing crisis. So something that I would definitely be keeping an eye on when something goes, you know, I don't think people are going to sit back and wait to see what happens with money printing to bring the market back. Um, I think we're gonna see a pretty serious pullback whenever this happens.
What would an indicator that that the markets or people internationally, domestically are losing faith in all this money printing? What would be an indicator of that?
That's a good question. Um,
I know what leaps out at me.
well, the
Gold,
price of gold is
silver.
the easy answer.
Yeah,
But
it's
even
kissing 1,000 right now.
it is, and I'm trying to think of something because gold has had its runs before. Typically, this one's different though, because typically when gold has had its runs is during very fearful times in the market, and that's not
That's
what
what's
we have right now.
counterintuitive here.
It is, and I so that what that leads me to believe, what I've the um thesis I've been running off of is people are more worried about debasement,
Mm-hmm.
and therefore every asset's going up. I mean, there's areas where housing prices are not going up, like Florida, all your COVID boom towns. But there's another factor there with the return to office and things like that, and the vast overbuilding in parts of Florida. So there's another factor in those. But I think overall, if you look at financial assets, um, I think people are more worried about debasement than anything else, and therefore every asset's been going up. I mean, look at silver; it's up 60% year to date,
Oh yeah.
and that one typically, I'll say, I guess the book answers it should be doing as good or better than gold because it's also used for industrial production, which we know is up.
Yeah, they say
And
silver's just getting started, so we'll see.
yeah,
Uh,
we'll see if
yeah,
if it goes back to its normal ratio, it'll be on the run for sure. Um,
Michael
the
Gentili says he saw the muzzle flashes from the USS Jersey from Mount Carmel as they sent presents to Beirut.
mm,
Sorry to interrupt you there, brother.
that's all good, brother. So, but you look at every asset. I mean, Bitcoin's crushing it this year. Ethereum's crushing it. I think people are just, I should say, people who follow the market, maybe a little more astute investors, are just looking for someplace outside of cash.
Let me ask you what you mean when you say debasement. Of course, my mind
Mhm,
immediately thinks the denarius or
mhm,
overprinting of fiat currency.
mhm.
Is there some other meaning that you have for debasement in that
Oh, that's
context?
exactly what I mean.
Okay,
That
okay,
that is precisely what I mean because
and
that's
that's
what's
why they're
happening.
running to assets, which we did an entire show on a month ago,
Exactly.
right?
Yep.
Yeah,
And at that point, any asset will do. Just
yeah.
get your money into something. I've seen a lot of talk out there about we're getting ready to start the next bull run in commodities, which happened last in the 70s. Really a huge bull run across all commodities, and that's all part of the debasement as well. Um, so there's some factors playing into that. Um, I mean, it's just it's hard to really cherry pick one or another. Um, but everything's had a heck of a run. Everything is stretched right now. Um, I mean, the market price to equity or price to earnings is way out of whack. Nvidia is doing some funny things too. I'm not saying there's anything totally nefarious about this, but they're counting some of their accounts receivable as revenue in the current quarter.
Ew.
I got to make them numbers, right?
Sounds like
Um,
Enron.
yep. And the other thing they're doing, and this was in the context of Nvidia, this is not a lot of money. It was $100 billion. They
Oh, I thought you meant some serious money. Sorry, man.
no, that's chump change. We're not talking Rich Brown money yet, okay?
Good.
Um, the uh, the Nvidia invested $100 billion into Intel, and Intel turned around and said, hey, we're going to buy a bunch of NVIDIA chips. And NVIDIA has been fined in the past for doing exactly that, running that circular loop.
What?
So, but
it's like the airlines when they bought their own stock to pump it up.
Yeah. So NVIDIA is doing it. It's publicly known. I have no great inside sources in NVIDIA. It's publicly known, and people are starting to scratch their heads about it. But that said, as long as these things keep running, you know, they're going to keep running. So, you know, if a person's nervous, maybe pull a little bit on each rip, pull a little bit off the table. You know, lock in those gains. I was watching a video yesterday when I was working out, and they were talking about I shouldn't say correlation. That's not the word I want to use. The similarities between the AI boom and the .com boom. And the one that was brought up, the stuff I've seen in the past was like, well, earnings this and that and revenues and blah, 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 and pets.com. Well, AI is real. You got ChatGPT, you got OpenAI. It's happening. It's not pets.com where they don't have anything. However, you remember the late 90s when the internet's going to change the world and all these things. And it did.
Oh, yeah.
I mean, we're talking over it right now. In 92, would you have ever guessed you were going to stream your shows? Like when I go watch TV, I stream it. There's no cable to my house, right? So the internet did change the world, but the market got way in front of it. And we have the .com bubble and the bust. And there's a lot of talk out there that AI is like this because there's more companies saying, yeah, we've put all this money into AI and we're not really seeing any savings yet. I'm a believer in AI. It's going to change the world. But the markets, because there's humans and emotions, will run too fast, too far, too fast, and get out ahead of that. And then over time, as we saw with the internet, it caught up and changed the world.
Yeah.
But if you invested in tech companies in 99 and 2000, you were dead money until 2013.
Yeah.
So don't conflate the markets and the underlying technology is what I'm saying.
No, I agree. And I'm going to touch on that. Then I want to get to welcome some folks onto the show. Rasmus got a great point, and I got a question for one of the things that you just said. I want to clarify.
All right.
Let's start with the technology piece, because a lot of people don't know this, but when we would pull into port, a lot of times at the port, there would be, because we'd been at sea for a while, you hadn't been able to call mom and let her know you're okay. So we'd pull into port, and some American telecommunications company would set up a big tent and have phones in there for you to use. Phone companies that no longer exist anymore. But you could go down there, and they're not doing it out of the goodness of their heart. You're paying insanely premium prices to make a call home. And they're getting, nowadays that doesn't exist anymore. You can get on this and talk to mama and hug the kids and tell them good night every night for nothing. So you're absolutely right. The infrastructure that's being laid with AI is really no different than the early internet, and it will change everything. As far as welcome some folks onto the show, we got goodness gracious, got a lot of folks on here.
Awesome.
John Shriver's on. Donald Green is on. Mr. Johnny King is on in the Bluegrass State. Dr. T.C. Fuller. Ted is on up there in Mississippi. Bruce says, good morning, Rich and Will. Coin number 481. Haven't advertised for American Wear Saturday this morning. Sorry about that, folks. Got two things to tell you real quick. High risk environment course coming up. If you turn on the news, you're living in some weird times. If you want to be more prepared for it, we got a 1-week course. Stay at the Cedar Lodge with us, sit on a rocking chair every night and watch the colors change. And then in the morning, kick it off at the range with Mike Seeklander, Dr. Fuller, and I, and some other amazing instructors. If you can make it, we'd love to have you. I got a few seats left. We're not quite at 20, but we're probably 3 or 4 seats away. So if you've been thinking about it, go to Shooting-Performance and make it happen. Rasmic is on. We're going to talk to you in just a moment there, Gold member. Brian is on from North Texas. Ted is on, says inflation by any other name is a horrible tax. We'd all agree with that. And what's Rasmic say?
Let's go back to Ted's real quick, because this ties together with what old Gold member there is saying. Inflation by any name is a horrible tax. Couldn't agree more. And it's the silent tax, right? Because it's one of those ones, it's like compound interest and an account to the positive. It happens slowly, and then all of a sudden you're like, where did all this come from? And it's also the politicians' preferred way to get rid of their excess. You inflate it away. And I think that's why we're not going to see a true war on inflation. We're not going to see a Paul Volcker 2.0. We can't do it. The national debt's too high. And this is leading to my belief that it's all about debasement, which ties into Razmik's comment there. If you bring that up, brother,
Sure.
he says April 2004 spot gold price was $401. Went to $1,000 per ounce since April of this year. Okay. And we had Razmik on some time back. We should probably revisit that whole gold topic with him at some point here. And the part of it too, let's be honest, there's plenty of fundamental reasons to own gold and own gold right now. But when you start seeing it on the news all the time, it's time to be careful. Right.
Yeah, I'll tell you, as Rasmus knows, and a lot of people know, you call in and go, hey, I want to sell an ounce of gold. I've got a Canadian maple leaf for, what are you giving me for that? And 90% of spot right now, it's like a spot. I'll give you a spot for it. I mean, that tells you that everybody's wanting to buy it, or before you might get 85, 90%, or they're not really buying right now. They're buying, and a lot of times they're paying spot. So,
So because they know they can hold it for a month or two and make a good return on that. To me, is that a mania? It's not tulips. I'm not saying any of that, but it's also like, okay, it's kind of like in the late 90s when everybody and their brother was like, hey, I got a stock tip for you. It's kind of like that. Okay. We're starting to get into that neighborhood. Which doesn't have me selling any of my gold or my paper gold and my 401k or anything like that, but it's just a little data point to be like, okay, are we getting near that? Now, none of that matters if they continue debasing the currency.
And they're going to. That's why don't stop buying.
Yeah. So
not stock advice.
What I would what I'll tell you what I am doing, hashtag not financial advice, is gold's due for a pullback here. 10%. 8%. It's been on a heck of a run, as we know. Is at some point here, it's going to stumble for a few days or a week, and there's going to be enough weak hands in there that bail out because they bought in late, right? They weren't buying in at 400 an ounce or when I first bought mine at 900 an ounce, and they're going to bail out. I'm going to personally see that as a buying opportunity.
Yeah, great point.
So at this point, I am not adding more. But I'm taking the money I would put into that each month and just stockpiling in the savings account and waiting for that pullback.
Okay. So I need to, a moment ago, you talked about, I forget what you were referencing, Will, but you said something about maybe time to take the money out and lock in those gains. And I think that idea, if I understand you correctly, is sell it and lock in the gains in dollars, right?
Correct.
But my point is, the dollar is, it may not feel like it a lot of times, but it is slowly doing this. It's on its way to zero, whether that's in 2100 or wherever, it will die at some point.
Sure.
So when we say lock in those gains, I mean, I don't know that makes much sense to me anymore. Help me out on that.
Okay. So we're talking two different timelines. You're talking, let's say, I'm going to put a number on, say 50 years. Okay.
Okay.
And I'm saying if, XYZ stock, whatever, has had it is just ripped. And you started off with it being 5% of your portfolio, and it's like an Oklo, the nuclear outfit that Peter Thiel's part of, and it's doubled. It's up to 10% of your portfolio. Trim it back down to 5% of your portfolio. Take that 5%, sit on it as dry powder for a month, two. I mean, you can put it in a money market and make 4% annualized, right? So you're not making nothing. And then let's say the big pullback happens January 7th, 2026. Use that as a buying opportunity into something that pulls back dramatically over the course of a period of time. So we're talking two different timelines.
Fair enough. And I don't remember, I don't know this to be certain, but when the Soviet Union was falling apart, and soldiers were walking off post because they weren't getting paid, I would imagine that currency just went into free fall. I don't know that to be certain, but I'm imagining it did. So if they don't, and again, the number one leading indicator for civil war, not civil strife like we have now, not a culture war like we have now, a no shit shooting war, has to do with the budgetary crisis. And as strange as that may seem, I've always laughed at that. Like, that's not enough. And then I see here we are in the midst of a budgetary crisis. So guys, elected officials, solve this shit quick. Can't go on much longer. We got to get at least a continuing resolution, get the armed forces paid, or you're going to have kids that like, I got to go work at a car wash, man. I got to make money. My children got to eat.
Yeah. So here's my question. And I don't know the answer to this. Was the budgetary crisis the cause or the symptom? Was it the symptom of a broken system that would, you see what I'm saying?
I totally see what you're saying. I don't know.
So, and it'd be worthy of some research because in the case of the Soviet Union, their budget failed because they had a flawed economic system.
Exactly.
Right?
If we keep debasing, we have a flawed economic system too.
Absolutely. And we will continue to debase because that's what history shows us happens every single time.
Yeah.
So there's no two ways around it.
Yeah.
So,
true.
So we're looking at our leading economic indicators here, and it's going down, and we're seeing a big divergence. So now here's and this goes back into the debasement talk. If we see a huge economic downturn in a post-COVID world, do you really see people accepting a long-term recession without some sort of stimmy checks? People aren't going to put up with that. They're going to want government checks. They're going to be like, hey, it worked during COVID. And even if guys like you, me, and the list of names over here I see in the comments are like, you're going to bring inflation back, it's going to come roaring back. They're going to say, I don't care, I have bills to pay this month. Right. And there's far too many people I've spoken to who truly don't see the connection between the stimmy checks and the inflation that happened 2 years later, because it's too long a lag and there's too much of the 24-hour news cycle in society, right? It's easier to blame it off on team red, team blue, whatever. Nope.
Exactly.
It was team green that did it. Okay. So that would further the debasement.
Yeah.
So,
and Trump is flirting with the idea of a $1,000 tax tariff bonus or a $2,000 tariff bonus. I'm like, what the hell are you doing?
He's a politician.
I know, but I always like to think my team red, if I have to be in that team, would be smarter than that. But evidently we're not.
At the end of the day, they're just politicians. In fact, I heard a line yesterday. I absolutely loved it. It was in that interview I sent you with William White, I believe his name was. He was at the Bank of International Settlements prior to and during the housing crisis. And he had a great line from a French politician said, I'm paraphrasing it a little bit. It said, we know what to do. We just don't know how to get reelected after we do it.
That is classic.
And it's so true, right? You think, these politicians, some of these are smart people, right? Well-educated people. They know. But the same way you got the vast majority of the populace looks at the 24-hour news cycle, they're looking at a 2-year and 4-year election cycle because that's what they're rewarded on. They're not rewarded on how well the country does in 20 years.
That's right.
So,
you know what it reminds me of? Imagine if you had to get reelected to continue being your children's parent. And one parent could be like, I'll give you cotton candy anytime you want. I'll let you stay up as late as you want. And Dad's like, you got to do your homework. You got to eat your vegetables. And, like, well, screw you, pal. I'm going to go over here with Mom. She's going to give me cotton candy and let me stay up all night.
Great analogy. Because that's exactly how and that's not the politician's fault. That's the electorate's fault. And that ties into Dr. Fuller's comment. And too much ignorance of finance basics. And that'll come back to your education system, right?
Yeah.
It all runs around in a circle.
But this is why they don't teach that shit in school. It should be pounded home. And what does Tony say?
Says his understanding the banks are floating the troops, pay interest-free loans until they get paid. I hope so. I really do.
I hope so, but that's not the bank's responsibility.
I agree.
But
if I had the bank, I'd go back to my local Federal Reserve and be like, dude, you need to float me some cash here. I got to get these guys paid. And, and you're going to make customers for life too, especially if this drags on.
What about the Air traffic controllers.
They're considered essential.
Okay, so they're good to go, but not the
Mhm.
military. That's cool. Okay, good deal.
Yeah, pays to have a union.
What's Rasmus say?
It says watching live hearing of Kilmar Obrega Garcia. I don't know who that is. I feel like I should. See how 200 should say. Yeah, fill us in on that one, Rasmus. I'm
Yeah, send a
not.
link or something.
Yeah, please do. All right. So we can see this divergence happening here with the leading economic indicators, but there has to be a catalyst. I mean, this black line could get all the way back down to 20, but as far as the stock market goes, if money keeps flowing in there, then it's going to keep going up, supply and demand.
Yeah.
Just like you were talking about with the gold prices. So, what's Dr. Fuller say there?
It's bizarre how it worked out when he stopped paying his military.
Yeah.
Not good.
Short rope, tall tree. So this one's something to watch with the housing market. For quite some time now, we've heard, well, the housing market is locked up because the people with the 3% mortgages aren't selling because they have to get a 6% mortgage, right? And that was absolutely true. However, we're seeing this come around as people have been forced to move, had to move for different reasons. The return to office comes to mind right away. So we're seeing the number of 6% plus mortgages rising and the sub 3% mortgages dropping. So now there'll be a middle ground in there, but they're using the extremes here just to make the case on a chart. So this may slowly unlock the housing market. And for buyers, this will be a good thing because suddenly there's going to be supply. And the argument has been that the supply was depressed because those with the lower mortgage rates, they just weren't going to sell. Period. Dot end. Well, I'm not giving up my 2.75% mortgage to go get a 6.5. Just
right.
not happening. Well, as this continues to happen over time, if it unlocks inventory, suddenly you get a bunch of inventory on the market. And I'll think of Florida specifically because I'm still waiting for my spot in God's waiting room down there. It's just more inventory down there is the last thing Florida needs, especially Southwest Florida where I'm looking. As a buyer, I want more inventory down there.
Yeah.
Because it just keeps dropping. And it still has a ways to go, historically speaking, probably at least again as much, if not double what it's gone down already. So we'll see if this starts unlocking. Where I think this is going to play in more, we're going to see is the Midwest and the Northeast, because those two regions never had a building boom during COVID because everybody left there to go to Florida, Texas, Utah, fill in the blanks. So I think just like the housing crisis, it's going to be very regionalized. Up here in Wisconsin, our home prices went up prior to the housing crisis, but not like a Phoenix. And therefore, we were down, but nothing like, like Fort Myers area is the area I study a lot. They were down 57% peak to trough during the housing crisis. I think we went down maybe 15% up here. So inventory matters a lot in housing, and the builders are moving into the Midwest and Northeast now because the opportunity's gone in the South, relatively speaking, and they're moving north to where there's demand.
Talking to Rasmick says the Maryland man, the immigration case, not related to our topic. Now I know who he's talking about. I didn't recognize Kilma.
Right.
Michael Gentili says the public sector businesses are hobbled by period accounting. Innovation over the last 50 years comes predominantly from privately held companies.
Yes. I couldn't agree more, especially about the period accounting stuff, because holy cow, I mean, just make this quarter's numbers. Oh, use 50, 60, 70, 120% of our profits because we're going to go borrow money to buy our own stock back. I think whenever the next crisis happens, they're going to outlaw stock buybacks.
I hope so.
Yeah, I hope so too.
It's only good for who? The CEOs and major shareholders?
Yeah, any shareholder, really. I mean, you could have 10 shares in NVIDIA, and if they do a buyback and stock goes up 10% for that, You went up 10% as well.
Yeah.
So, but it's the self-licking ice cream cone.
Yeah.
So I see Joseph is on YouTube. Good morning, sir.
Morning, Joseph.
So, oh, Rasmus going to the range. I'm jealous. I got to do a little shooting over the weekend. It was good to get out again. So,
Yeah.
Old J Dog here, Fed Chief Powell says stock prices appear fairly highly valued. Does that remind you of anything another Fed chairman said back in the 90s?
Yeah.
So, um, so Powell was very reserved in his language, as are most Fed chairmen. So he said on Tuesday, it was this last Tuesday, that asset prices, a category that typically includes stocks and other risk instruments, are at elevated levels. Though Powell noted the lofty equity values, he said this is, quote, not a time of elevated financial stability risks, end quote. Yeah, and we're gonna dig into these two comments a little bit here, just for some historical perspective. If you want to go to the next slide there, brother.
Okay.
Okay, so the top part is just the first quote from him. What's the maestro have to say here?
How do we know when irrational exuberance has unduly escalated asset values?
That was Alan Greenspan, December 5th, 1996. The irrational exuberance, made famous later. But let's think about that, right?
Yeah.
We sit back now and go, oh, he knew, right?
Yeah.
So should we sell everything? If you go to the next chart,
Okay.
next slide. If
What
you
is
did, you
this?
lost out on 108% gain.
Yeah.
Because the money kept flowing in.
Yep.
And if enough money flows in, fundamentals don't matter.
Mm-hmm.
You can take every one of my fancy little charts I look at. You can look at PE ratios, PEG ratios, book to sales. You can look at all this junk. None of it matters if the money keeps flowing into the stock market.
End of the day, economics is not about math so much as it's about psychology, or at least equal parts math and psychology, I would
Yep.
submit.
And anymore, money flow.
Yep.
So see Gyle's on from the Philippines. Good to see you, brother. Don't worry
Morning,
about
Guy.
being late. Just glad
Glad
to
you're
have you.
here.
Yep. So my point here is everybody looks back at Greenspan and his irrational exuberance comment, and oh, he knew. Well, he was also 3 years too early. So if you listen to him, you lost out on a doubling of your money in 3 years.
Yeah.
So that said, each side of any argument, just like in politics, they'll take one little snippet, like they're from Greenspan, and say, "See, you should have just listened to him." Yeah, but you were also missed out on a whole lot of gain there too. Okay, so
For the record, we're also always too early.
yes, yep, and it's I think it's when you study something, it's so obvious, right? We can see
Mm-hmm.
the debasement happening, right? But until there's an alternative, does it really matter?
Right.
Not really. It's a great talking point, and it's a great overall knowledge to know it's coming at some point, but it doesn't matter until it matters.
Exactly. Well, at least you can take steps, and that's what we always recommend doing
Yes.
in the interim. It's coming,
Yep,
tsunami's
it's
coming, whatever, like might
yep.
want to lay on some food, water, might want to
Yep.
buy at this asset or not,
Mhm.
yeah.
And then kind of sit back and wait for that trigger, right? And obviously we don't know what that trigger would be, but we can prepare ourselves to be looking for these things. And if you go back to that chart for just a second, I'm
Mhm.
sure right where that vertical blue line is, which is just part of the chart showing the 108% gain, I'm sure when that started down right there were plenty of people who were like, this is it. Okay. But there were enough people, institutions out there that bought the dip to drive it back up.
Yeah.
So maybe you end up with a false start. Maybe when that started down, somebody, process of elimination, somebody sold everything, right? So, that's where I go back to my preaching about be incremental.
Yeah.
If something has ripped for you, awesome, good for you. Maybe pare it back to where your target weight is. Basic rebalancing, right?
Mhm.
And just be cautious. And this time around, there's a lot more information out there too.
So what do you
there
mean by that
wasn't.
this time around? There's more information.
Well, in '99, the internet was new, but by the same token, I don't know if I'm assuming the Federal Reserve had a website up by then, but now, I mean, I bring up housing charts and housing employment
Oh, yeah.
charts and all these things. So there's more information out there for a person who wants it. There's still plenty of propaganda out there, better known
Yeah.
as CNBC. Um, you know, so try to go to source documents like you and I do in the show, brother, because
Oh,
everybody's
you're
going to
absolutely
spin in
right.
every
It was
direction.
very antiquated,
Yeah.
what you were getting back in 1999. It was
Yeah, I mean,
pretty pathetic compared to
I
today.
just thought being able to see a stock price in real time. Oh my goodness.
Right.
Woo-hoo. Now it's like, okay, yeah. Okay, that's Tuesday. You know. So point being here, um, you know, Greenspan, I'm sure he had his concerns when he made this irrational exuberance, but if you look at the full context of it, he was saying, how can we tell when there's irrational exuberance? And the point was it wasn't there yet. It wasn't there for another 3 years. And then something else triggered it. Irrational exuberance didn't just die. Something else triggered the start of that meltdown we call the dot-com bubble, right?
Do you know what it was? I don't.
I read recently, actually, Enron played into it.
Uh,
Because after the Enron thing blew up, people started looking at other places. Oh, what was it? Was that that? I'm sorry, that was the housing crisis. Actually, I don't know what really got the dot-com bubble going down.
if anybody does put it in the
Yeah,
comments, because
that's something I need to look
I
at.
don't know what made it pop either. I should.
Yeah.
I don't.
So, in the end is when the money flow changed.
Yeah.
So that's one reason to look at the money flow. So, Gal says he hasn't shot a pistol in almost a year. I am sorry to hear that, brother. I
You got to
think
fix that, buddy.
there's probably a program out there to help you get through that. So, maybe it's that. What was that course you're teaching again, brother?
High risk environment course.
That would get you shooting a pistol, I'm sure. So, be a heck of a commute from the Philippines, though.
Yeah.
So
It seems like we always have. We've had another warrior camp. Somebody come in from Korea. Somebody come in from Canada. Several different places. So yeah, it's not out of the realm of possibility.
awesome. So, point here, guys, his irrational exuberance speech, and then 3 years later. So when Powell's saying things like this, he can read the tea leaves just as good, probably better than we can. Also, he wants to get these comments like this on record. So if it happens during the rest of his tenure or happens shortly after he leaves next May, he can be on record and point back at me. See, in October of 25, I said this. So he's also setting up his legacy and giving himself an out later on to say, see, told you, we all knew it was fill in the blank. It was Trump, it was Team Red, it was Team Blue, it was whatever, right?
He will always be Jerome Transitory Powell, as
Yep.
far as I'm concerned.
Yep.
That's his legacy.
Yep.
You either lied
course.
or you didn't know. And either one is. And he can always say, well, hey, I had to. If I told the truth, the markets might, go haywire.
That was another interesting tidbit from that interview I sent you with that William White. He went to a talk that Arthur Burns, Fed chairman in the 70s that lost control of inflation, was talking about. And Burns argued that as long as duly democratically elected leaders, I'll say that with air quotes, want something, the central bank will eventually give into it. And
True.
my first thought was, so much for an independent Federal Reserve, because that's what they tout and pretend to protect, right? So
well, Moody's and Standard & Poor's, they're going to give them what they want anyway. When it comes to rating agencies, we saw that during the GFC.
Yep.
What do you want this rated at?
Yeah.
It'd be nice if that was a AAA. Okay, we'll see what we can do. It's proprietary algorithm. We'll run it. We'll see what we can get you.
All right. So I watched an interview with Steve Eisman yesterday too. He does a great podcast also. Steve Eisman is the guy who Steve Carell played in The Big Short, Mark Baum. Okay. Changed the name. I won't dig into the reasons. It doesn't matter, but he digs into the reasons why on this interview. And so we know back then with the mortgage-backed securities, it was basically the pension funds. We need more yield. We need more yield. And Wall Street found a way. And it was bundling together subprime and prime mortgages. And this ties into some slides later on, guys. So they would say like a Goldman Sachs would be like, we want to buy $500 billion worth of mortgage-backed securities, and here's the grid. We'll accept 10% subprime at this level, 10% subprime at this level, 10% here, and we want 50% to be prime, whatever it was, right? So they would send over and they'd say, okay, we're going to send you $500 million, which for the record was a small amount for that. $500 million, and you're going to give us whatever. It's going to be whatever it be, 50,000 mortgages. Average was like 100,000, 200,000 per mortgage. Whatever those numbers work out to be, doesn't matter. Well, they would send the check over. They would pay a certain number of points on it, and that's how the outfit bundling it would get paid, was the points on top of that. And then Goldman Sachs doesn't have enough people to go through and do due diligence on these to make sure these loans actually met the criteria they laid out in their grid. So they hired, and this is the interesting part, every single bank on Wall Street hired the same firm to do the due diligence. Clayton, and there's a second name in there, so I believe it starts with an A. I don't want to, it's Clayton something. They all hired the exact same firm to do it. This firm would go through and pull and this was under the contract, this wasn't under the table, a statistically significant portion, and check them for compliance with the grid that was laid out. And they would pull 10% of the loans and check them, and then extrapolate that over the whole thing. What was it? I think 10%. And whatever the percentage was, they would.
But was it randomized, or were they?
It was randomized, the 10%? But they would pull so much from each tranche of those, right?
But a cherry pick 10 or a randomized 10?
It was randomized.
Okay, gotcha.
And so they would pull this and they'd go, doesn't comply. You've got 30% subprime at this level. You're only supposed to have 10%. So they would kick those ones they threw out, they would kick those back to whoever put together mortgage-backed security and say, give me my money back for the points on that. Now, if you did that, brother, what would you do with the rest of the loans in that portfolio?
Keep finding problems, I guess.
That's what you would do.
Yeah.
You know what they did? You know how many of all the banks, Goldman Sachs, JP Morgan, according to Steve Eisman, you know how many of them checked the rest of the loans?
No idea. Oh, wow.
0. They just accepted the rest at face value.
And again, we talk about, I wanted perp walks out of the GFC.
Mm-hmm.
And when I saw how much money me and my family lost, and I'm like, like, I want to see people handcuffs. Guess what I got?
Yeah.
Nothing.
Yep. So, so that was that. They just accept the rest at face value. Oh, we must have found the bad ones. Nobody checked because nobody wanted to check because it would impede making money. And in fairness to Wall Street, you've got pension funds dangling all this money in front of them, going, we want this. And the pension funds want it because they have to get the higher yield because pay rates were going up and therefore pensions were going up. They had to make some more yield somewhere. So they're pushing Wall Street, give us this stuff. And Wall Street, they're human, right? They're going to react to their incentives.
There's a great scene in Margin Call, which is a phenomenal movie, where Paul Bettany's like, hey, man, basically, you need people like me, and this guy's a scumbag. And he's like, hey, but I make sure the money keeps flowing so that you're not out there fighting in the street for a couple of grains of wheat, And then there's a compelling point to that.
There really is, What's Michael Gentili said there?
Enron, Arthur Andersen, and another, I can't remember, happened in about 45 days, and the equity market dried up. I remember because we were cash buyers in the business market at that time. Yeah.
There you go.
Arthur Andersen went the way of the dodo after that, didn't it?
You did. Yep. And again, it's all about money flow. Money flowing around is the grease in the system. And when that locks up, and Michael lived it, everything stops.
Yeah.
It's just over. So here's another one. I mean, the dumb money, if you will, the individual investor is referred to as dumb money on Wall Street. The dumb money got it right this year, though, when the tariff tantrum happened. The small investor piled into the market, and the big guys are still trying to catch up into year end, which is another catalyst the rest of this year. Is they got to play catch up and get money in the market and make some more money because they're behind.
Mm-hmm.
But you can see as well, at 31%, U.S. households equity exposure and percentage here. 31% of households are exposed to equities. That is way above the dot-com bubble. Now, part of that too is we didn't have Robinhood back then. Matter of fact, I was thinking about this yesterday when I saw this chart. I remember back then I had an account at Edward Jones, an IRA, and it was $50 a trade.
Whoa.
$50 a trade. And I remember the advisor I had there telling me, yeah, you always want to make sure whatever you buy at least 50 shares. That way it's only costing you $1 a share. But at the time that was reasonable because that's what everybody charged. Right. But this is also going back to our conversation about how the internet's going to change the world. Then whoever did the first internet trading company, started bringing that down. And now you get free trades. And I say free with air quotes because ain't nothing free. You pay for it when they make their money on cash for order flow. And they basically skim off a penny or two off every trade. They make their money.
Well, and then I don't know. I would never trust Robinhood again. I don't even know how they have a business model after they locked everybody out from the GameStop and let the big guys cash out.
Yep.
And I was like, that is the antithesis of what Robinhood was founded on. And I don't know how those people can sleep at night. And if they had locked me out, then I might have smacked somebody in the teeth with a 2x4 when I saw them in the street.
They sleep at night with $100 bills in their pillows.
Oh yeah, they're exactly.
Oh
well,
so it is what it is. So all right. So basically, this is a sign that things are getting stretched, right? So suddenly, if you've got this many households invested in the market, and the market starts going down, they're going to feel that pain. Now, will they all bail out and cause a crash? Maybe, maybe not. But they're going to feel the pain whenever this happens. And people who are feeling pain react to that. And this is where I want to bend this into the societal side of things. Because you can bet after 1968, we saw a lot of societal strife, right? We know we did, right? But it wasn't just that. It wasn't just the stock market that caused that. It was a bunch of things together. We had, changing generations, right? You had the hippies and the veterans and all that stuff going on with this, right? We didn't see that in 2000. We didn't see social strife or anything like that because there weren't the other societal frictions happening.
But as close, I guess, we came in the 2000s, Occupy Wall Street.
Yeah, and that was after the housing crisis, not the dot-com bubble.
Yeah, exactly. Yeah.
So, but again, you're right in that there was some societal strife brought on, enhanced by a financial crisis, right? But now look how stretched we are and how many households are exposed to the market. The flip side of that argument is also you've got 401ks with automatic enrollment now. I believe that's the new law now. It actually has to be automatic enrollment and automatic adjust up every year, which I don't like people being controlled like that. But by the same token, it is for their own good. Otherwise, too many people go spend it on big screen TV. So I'm kind of two minds on that. But it's making them more exposed to it. And let's say you get somebody who's exposed to this and suddenly there's a crash, going to lose faith in the system. More societal strife inputs, right? All right. So now if we go to the next one, here's where this market is not big enough to cause a housing crisis type thing. Want to put that out there right away. Okay. So there's no misunderstandings here, but let's look at the Reuters article. U.S. auto bankruptcies show rising credit pain in low income households. This is the part the low income part this is where I want to really dive into. 2 auto sector bankruptcies have rattled parts of the U.S. credit market, raising concerns about the deterioration of the financial health of low-income households and migrant communities. Okay. You want to read that bottom one off for us, brother?
Yeah. A big auto lender went bankrupt, and here's what it means. Tricolor Holdings is a major provider of subprime auto loans. The company also operates a chain of used car dealerships across the Southwest under the names of Tricolor Auto, Gannis and Gannis. Gannis and Gannis, that's weird.
Yeah.
It specializes in loans to low credit and no credit buyers, often issuing them without a credit check. Tricolor, which specializes in high-risk loans often issued without a credit check, is going out of business. Shocker. Larger banks Likely know better helps. I can't read that other part there.
Help fund it.
Mm-hmm.
Its failure could, and this is the part that's important, make them more risk adverse. Okay. It's JP Morgan was the big one for tricolor. Okay. I'm going to say tricolor because I'm terrible with Spanish. So their big market was illegal aliens.
Oh, really?
Yeah. No credit check, right? They don't have a credit number. So they just wouldn't do a credit check. And also very low income, bad credit risk type people. Okay.
We saw that during
And
the GFC too, right?
what's that?
We saw that during the GFC too.
Oh yeah. Yeah. And during the GFC, there was low doc, no doc loans, right? And there was ninja loans.
Yep.
There was also a lot during the housing crisis that was like, hey, Mr. Brown, to qualify for the loan for this home that you have an offer in on, you need to make $50,000 a year. How much do you make?
$50,000 a year.
Oh, awesome. Good. I'll write that down right here. Okay.
Yep.
It happened a lot. Do you think that's happening in these auto loans?
Mm-hmm.
Yeah. And Tricolor, they didn't go chapter 11. They went chapter 7. They just liquidated.
Bye-bye.
Bye-bye. So now, and this is where it affects the rest of us, if you will. Okay. And the low income people is Tricolor didn't come up with their own money. They borrowed it from JP Morgan, Bank of America, so on and so forth. Now these other guys just got burned. When the quad color, the next one like this comes along, they're not going to be in a big hurry to lend to them.
Mm-hmm. I want to think somebody with half a brain was sitting at JP Morgan going, this is what we're going to do. Yeah, this sounds like a great business opportunity. Like,
you got to look at the percentages. Let's say 20% of them are going to default, chop the car up, whatever, right?
Yeah.
Well, if you're making enough money to still make those numbers work at 20%, add a little pad in there and have at it.
Mm-hmm.
It works great until it doesn't.
It's so much of life is that way, right?
Yeah. So so these banks pulling back though, that's going to affect money flow to this strata of society, right? That affects everything.
Maybe they should I don't know, go back to their country of origin if things are getting too hard here.
Well, there's that, but not everybody who borrowed there was, an undocumented immigrant. Okay. There's plenty of low income Americans, American born citizens there as well. It was a pretty big outfit. But these banks pulling back and getting rid of the that risk, that starts affecting those lower income areas of society first, right?
Mm-hmm.
And then will it creep up? I don't know. Maybe not. Okay. We'll wait and see. But it's something to keep an eye on. What's Dr. Fuller say?
He says it's always fun when your employer gets to choose what's best for you, especially when it comes to the money they pay you. Yeah. Edmund Scarborough's on. Good morning, sir. Let's see here.
Yeah, let's see the next one here. So this is Bernanke. Remember this one? Subprime mortgage loans won't seriously hurt the economy, right? We believe that subprime is contained. Yeah. So this is
Benjamin Subprime Bernanke. That's how I call
it.
him.
And you'll notice the date 2010, right? I'm sorry, updated 2010, originally from May of 07, right? So now below this is current day. This is 90 plus days delinquent auto loans. So and we know what car prices have done. And we know what average payment now is edging up towards $1,000 a month.
So this only goes to Q4 of 2019, right?
Yeah, you are correct. Good catch. That was the next thing I was bringing up. Because if you go to the next chart, the yellow circle is where the last chart ended.
I got you. Perfect.
Yeah. Look at me setting you up like that.
I love it.
And you caught it. That was
ambush.
Awesome. Yep, exactly. L form, L shape. So and we thought back in 2019, we were like, oh boy, that's getting pretty ugly. And then of course it dropped during COVID. Stimmy
Why
checks.
is that?
Everybody could make their payments magically, right?
Because of what? What happened?
Stimmy.
Oh, that's right.
Yeah.
Now, what if Trump does the $2,000 tariff bonuses?
I mean, I'm assuming that's a one-time $2,000 payment.
I don't know.
I mean, so people maybe get caught up on stuff, get back under their delinquency, 90 or this chart's 60 days. And you can see the source there, Goldman Sachs. I mean, they're the ones making the loans, right? So we're looking at this and going, okay, so now, auto loan delinquencies are going up. At some point here, they're going to repo these cars, right? And this chart goes back to 06, and you can see the bump there during the housing crisis. We're above that.
Mm-hmm.
And
Oh yeah.
there's a lot of people out there already saying, hey, we're already in a recession. It's just getting papered over, and really has been for a couple of years. And I think there's some validity to portions of that argument. I mean, if you take away the deficit spending on the last couple of years of the Biden administration, GDP would have been negative.
Great point.
What
are some other indicators though? When I see this, I'm reminded of buy now, pay later, credit cards maxed out into unprecedented territory.
Yep.
And I got to think these data points are telling me something about income inequality or something. You know what I mean?
K-shaped recovery, right?
Yes, there we go.
And the one the one caveat I'll throw out there on your credit card thing, I'm with you in spirit, but remember, as long as inflation runs, we have to adjust those balances for inflation. Because if inflation's going up,
speak more to that, could you? Well, I'm a
sure.
little.
So
I'm still a little
let's say
fuzzy on
right
that.
now, overall, I'm going to make the numbers a little more digestible. Say overall per person, average credit card balance is $10,000, right?
Mm-hmm.
And let's just say inflation's running 10%.
Mm-hmm.
And next year, the average credit card balance is $11,000 per person. Well, it just stayed in line with inflation. We're going to keep making new nominal highs. The raw number is going to keep going up because inflation keeps going up, right?
Mm-hmm.
But we need to adjust that for inflation. Now, if it was at 10,000 and inflation's running 10%, it should be 11,000. But if it's at 12,000, now it's outpacing inflation.
Mm-hmm.
So I would just caution everyone to not just look at the raw numbers. Oh, credit card balances are an all-time high again this month.
Makes sense.
Prices are going up too.
Right.
Now,
when what if we strip that out? Then I'd still say it's going up.
I agree. That's my gut feel.
Yeah.
But we also need to make sure we're comparing purchasing power to purchasing power. And of course, with the interest rates out there on credit cards, bumping against 30% now, if somebody's just making minimum payments, it's going to outpace inflation.
What would cause someone to get into the buy now, pay later to buy a sack of, some bacon and a thing of beans? Well, probably if I've already maxed my credit cards out, that's probably going to be the only way I could afford to pay this.
Yep.
What does Michael say here?
Let's see here. Let me just pretend I need these glasses. Pay over time, DoorDash is one of my leading indicators. Consumers aren't controlling their own spending. And yes, people are using buy now, pay later to DoorDash and
That's
Grubhub
insane.
stuff. It is absolutely insane.
So that $12 Taco Bell you got at midnight, it's going to cost you $25 over the next 6 months or something stupid like that.
And 30 minutes in the bathroom. So this is, and that's also I see what Michael's point there is with DoorDash. I agree with it completely. And I'll add on it. It's also a symptom of a society that just makes bad decisions, right? I mean, next time you're in town, buy some freaking ground beef and some taco shells and make your own darn tacos.
One of the worst things you could be called in the Marine Corps. Of course, I've been retired over 13 years now, but back in the day, it was like, let me tell you about this officer. He makes comfort-based decisions, and it was like, damn, you might as well called his wife ugly. I mean, that was one of the worst things you could say about somebody, and yet that's all I see Americans doing. Whether it's walking around in their PJs, walking around 100 pounds overweight, door dashing at 2 a.m. on buy now, pay later. I mean,
absolutely.
Any of this stuff is like, it's insane. Who do you think's gonna, and not investing, not having $400 worth of emergency funds, and any one of these indicators could make me freak out. It's like, what are you doing?
Yeah. Well, and that's a great way to put it. I mean, look at our whole society. Everything's all about now, and comfort. And I don't want to have any discomfort or pain in my life. Oh, bad things are happening. Government needs to send me a check.
And these are the same people that, that are fighting ICE and want civil war. I'm like,
Mhm.
guys, you can't
Yeah.
even do a damn pull up. I think you be careful.
Yeah.
You
Careful what you ask for.
can't afford bullets. Buy now, pay later for your ammunition to fight the next
Ooh.
civil war. Good luck with that.
Ooh. Okay. Now, see,
So,
that's
Mark,
totally different. That's totally different. Okay. Don't be dissing buy now, pay later for ammo. Okay. And if my wife is listening, this
could be a business model we could get
Right.
into. Will.
Absolutely. So, all right. So these are going up. I see these as more leading economic indicators. So I
Mhm.
just pulled these stats off the interwebs yesterday. So what's the rate for a subprime loan? Because I mean, thankfully I don't know that. Okay.
6.88. Is that what I'm reading?
No, 11.86.
Holy crap. I was on the wrong end of that.
Yeah.
Deep subprime 14.17. They're never going to be
Yeah.
able to pay that.
Exactly. Okay. So, and then the second point here, recent University of Texas study noted the subprime borrowers have a median gross monthly income of just shy of 4,000, just over 47,000 annually, and they're paying 12% interest on a car loan.
Mm-mm.
Now, bear in mind, the last thing people stop paying on is their car. They stop
That's
paying
right.
on their rent and their mortgage before the car, because you got to have the car to get to work to try and dig yourself out of whatever hole you got going, right?
Mhm.
So when we see car loan delinquencies going up, that's actually, in my opinion, a later indicator.
Mhm.
It's starting in the lower end. That's where it always starts at, right? Because they
Mhm.
don't have the savings, the assets to, and they didn't make responsible decisions on these things, right? So, subprime auto loan market is between 80 and 140 billion, and it's basically 14% of new auto loans. This is where I started this at. This is nothing like the housing crisis in dollar amounts. Nothing like
Mm.
that at all. I'm using this more as an indicator, a leading indicator of what could come. Okay, so I don't want anybody to think I'm saying the whole economy is going to crash over subprime auto loans. No, that the government could write a check and make these banks whole, and it could all go away. Okay, and let's face it, 140, call it 150 billion dollars. I mean, that's a rounding error on last week's
Mhm.
overspending of the government, right? So,
But it
subprime auto
doesn't teach
loans,
a moral hazard.
yeah,
That's another
well,
problem we have in
absolutely
this
right.
country.
Yep.
Is there's no moral hazard. Oh, you're
Mhm.
a GSIB. You're too big to fail. No problem,
Yep.
man. I'll paper you out of your problem, but you'll fire the board and the CEO. Heck, no. You kidding me?
Yeah. Well, I'll go
Just
one
call it
step
something
further.
else, and we'll keep paying you.
The GSIBs don't even matter anymore. Silicon Valley Bank proved that when
True.
the Fed came in and made everybody whole. And Silicon Valley was not a GSIB.
No,
Okay.
they weren't.
GSIB is globally systemic important bank, literally by law too big to fail. Right. But when Silicon Valley Bank failed, the Fed came in and made everybody whole through the FDIC, but the Fed funded it.
Mhm.
Okay. So now every bank by precedent is too big to fail.
I want to take on Will Parker's comment right now
All right.
because he's absolutely right. The firearms industry is down in a big way right now and has been all year.
Mm-hmm.
Man, I tell you what, prices for firearms and ammunition right now has never in my lifetime been more affordable. Never.
Yep.
So, if you're thinking, well, I might be priced out of gold right now, buy a crate of ARs from Palmetto State,
Mm-hmm.
or buy a pallet of ammo and stick it around. I promise you, somebody's going to need it at some point.
Yeah. Well, I mean,
Eh,
I was pricing out 9 mil because I'm starting to run low. I'm down to
mhm.
34,000 rounds. It's a joke.
Well,
Okay. The I can remember. I think it was just prior to the housing crisis. I remember paying, it was factory reman ammo, free shipping, 17 cents a round.
wow.
I can now get it from Midway USA, new MagTech stuff for 19 cents a round.
Hmm.
You factor inflation into that. I didn't go back and do the math, but I bet I'm paying like the equivalent of 12 cents a round compared to that 17 I paid back in 07, 08, whenever that was that I did that. And that was
See, Clinton.
and I'm not even going apples to apples because that was factory reman, once fired
Hmm.
brass back then, and now it's brand new MagTech stuff.
See, Clinton writes about it in almost all of his books about how me and him 30 years ago would pull our money just to buy one ammo can full of ammunition. Now, I don't
Mm-hmm.
think anything of, buy 2,000 rounds and get free shipping
Yep.
at an insane price. I mean, and I just bought heck, I bought 2 pistols in the last 2 weeks just because, I mean, I can't believe how cheap they are.
Yeah. Well, and part of that too, Trump got elected.
Hmm.
If
I
we had
think that's
President
what it is.
Harris,
Hmm.
and we see this time and again, right? And this is hashtag not financial advice, but if
Hmm.
it starts looking like we have President Gavin Newsom, Smith and Wesson and Ruger are publicly traded companies, and their business is going to go up. I'm just
Hmm.
saying.
Yeah, Will says someone just bought blemished completed basic M4s from PSA for $4.19 a piece. I
Yeah.
remember, again, 30 years
Oh,
ago, the cheapest AR you could find at a gun show was like $5.99.
yeah.
I mean, look at it now,
Yeah.
which
And
is
I can remember
beautiful,
when
right?
I can remember was the cheap ones on when we thought Hillary was going to win back in 16. I remember cheap ones were 800, 850.
You couldn't
And now,
find at $50 a box of per 9 mil in 2020 during the summer of love.
uh-huh.
If you could find them, they were at least $50 a box. Now they're $9.99.
Okay, so as long as we're telling war stories here, so to speak, when Sandy Hook happened and you couldn't buy anything, the
Hmm.
PMags for ARs, the dust cover that came on those. Remember
Yeah,
those things? I sold a lot of 10 of those on eBay for $50. Just the dust cover.
damn.
I threw it up there just on a lark. I took a picture on a towel on the kitchen counter and put it up there, $50, buy it now. It was gone in 15 minutes. I'm like, they're freaking dust covers.
What did P.T. Barnum say? A sucker's born
Sucker
every minute.
born every minute. Yep.
Jeez.
So, yep. And to all that end, guys, ammoseek.com is my favorite place to go. It's an aggregator. It aggregates the prices of all the other websites out there. We're not affiliated with them. We don't get any money off them, nothing like that. Go on there, type in what you want, and it goes out and searches all the sites. You can sort by you want brass case, steel case, you want free shipping, all that stuff.
Yeah, mine
Great
is
source.
SGMO.
Yep.
SGMO, I tell you, I've been fast shipping, great prices. Gerald says Freedom Munitions has free shipping on a regular basis, good quality. Dr. Fuller says prepare before the crisis. Now's the time. I absolutely agree with you. Now is the time.
Yep.
Not
So
saying the crisis is coming next week or next month, but we can all see the writing on the wall. That's what this entire show is about.
exactly. Exactly right. So our last point here is check this out, brother. Subprime auto loans in the second quarter of 2025, average monthly payment $777 a month. Now that's $777 a month net after taxes
Right.
on a group of people who have a median income of $3,900 a month. So let's just say by the time they pay state, local, federal taxes, all the other stuff that goes with it, say they got $3,000, a fourth of their income is going to the car payment.
Mm-hmm.
So, um, oh, actually, I'm going to disagree with Dr. Fuller's comment here. He says ammo doesn't spoil. It does. That's why I have to keep shooting it and buying more.
I told my wife the same thing. I can't let it sit here for
Because
a month. Are you kidding me?
it goes bad. We have to. It's like buying vegetables. You have
Hmm.
to cycle it through. Yeah.
Okay, I'm going to tell a crazy story real, and I'll try to make it quick.
Okay.
But this is just I find this hilarious. I didn't know this until last year or so. My dad told me that my grandfather Ralph Brown, who I'm named after, I'm sitting in his house right now. He loved whiskey. I don't know why, but
Hmm.
he loved that brown liquor. Anyway, he would if he cracked the seal on a bottle of whiskey, he would drink it all the way in one sitting because
Wow.
he thought it spoiled. And the reason why he did that was his wife, my grandmother, would pour some Ipecac in it because she didn't want him boozing. So once he got the idea if it sits around where she could actually get to it, put Ipecac in it and make him
Uh-huh.
throw up, that was her little hidden secret. He's like, well, damn, this stuff must spoil, And of course, he couldn't read or write. He was a pretty simple guy, but he'd crack it and drink the whole damn thing and throw the bottle in the ditch, So again, it's one of those things. He thought it spoiled. You couldn't convince him otherwise because it made him sick. If he drank it all in one go, he was fine. But if it sat around where she could get to it,
Mhm.
it would spoil. Weird.
Modern problems require modern solutions.
That's what I said.
Yeah, absolutely. So, um, and Gerald says he still has some of that Obama ammo. He's still shooting. Yeah, I mean, now's the time to buy it, guys. Rich is dead on. Just allocate some money to that every month and just buy it. So,
Can't go
because
wrong.
once it's like we need to have this, it's going to be too late. So all this subprime stuff, all this other stuff to get to this slide, the big buildup. Okay. I can understand. I'm not saying I agree with it, anybody. I can understand the rise of somebody like Mamdani. Look at the whether it's
Or
real
Mao or
or
Pol Pot or any of these other
right, whether
genocidal
it's real
communists.
or perceived or brought on by, generational self-talk, it's different now than when you and I were young. Okay. And I'm not saying, oh, give these kids everything. I'm not saying that at all.
Right.
Okay. What I am saying though is we've seen what has happened with asset prices, right? And, I was just speaking with somebody this like a couple weeks ago, and they're like, oh, that's what my grandpa means, bring on more inflation because he has assets, right? So if you have assets, inflation is survivable. If you don't have assets, inflation is not survivable. And you can survive it, but it is tougher. No two ways about it. Okay, guys. So up here in the upper part of this March 2025 survey from the Cato Institute, they lean right. No two ways about it. And YouGov found 62% of Americans 18 to 29 held favorable views of socialism. What I really took out of that was A, the raw numbers, B, our education system sucks. Okay. Under that, data from 2019, granted it's dated. Okay. 70% of millennials and 64% of Gen Z said they could be somewhat or extremely likely to vote for a socialist candidate. Okay. Well, that got me thinking, okay, those numbers are great, whatever, right?
Mm-hmm.
Let's look at US population by generation here. Okay. Silent generation, World War II generation, 15 million. Boomers, born from 46 to 64, 67 million. Gen X, best generation ever, 65 to 80, 65 million. Millennials, 81 to 96, 74.2 million participation trophies out there. Gen Z, 71 million. Okay. But if you go back to our numbers up here about what these younger folks view as socialism, as the silent generation of the boomers find their way into the afterlife, those younger people now are going to be in charge.
Yeah.
So, and right, wrong, or indifferent, that's how they perceive socialism. Okay. And I've seen interviews and heard them say, well, socialism seems to work in Sweden, Norway, wherever. They completely discount the other examples, which you brought up immediately, right?
Yeah.
Again, our education system sucks. Okay. But so then over here, I took this yellow area, age of each generation. It's easier than looking at the years they were born. The silent generation, they're 80 and 97. Going to shrink rapidly here. That's 6% of the population. Boomers, 26%. Gen X, 26. Millennials, 29. Gen Z, 14% is not completely accurate because I just took a wag at half of that above voting age. Okay. But if you look at millennials and Gen Z, that's 43% of the population right now.
Mm-hmm.
If we go back to the numbers at the top and just take half of that, that's 21% of the population, voting age population, that views socialism favorably. And then we wonder why somebody like Mamdani is going to win New York City mayor. And then revisiting our headline here at the bottom, U.S. auto bankruptcies show rising credit paying low-income households. Even if those low-income households don't bend socialist, there's going to be somebody standing up there going, hey, we're going to take care of this.
Yeah.
They're going to get votes.
No, I agree with it. And Michael, my brain was right there with you. Not only is Norway oil subsidized, Norway's a pretty homogenous society, and they don't buy into this diversity as our strength lie, right? So when you have a bunch of Norwegians that have an IQ in excess of 105 on average, and they're all homogenous society, they're bought into it, and the oil, as long as it keeps chugging, they can subsidize all the social experimentation. Sweden, however, who bought into the diversity lie, is getting their ass kicked.
Yep.
And, that thing is just a powder keg waiting to go, as well as Paris and the UK and any one of
Mhm.
those places that bought
Yep.
into that lie. And back to this, Mamdani, this kind of crap right here, we can build a new kind of politics. That's Marxism. I mean,
It
it
is. Yep.
reminds me of the Kamala Harris crap of we
Be
can do
unburdened by what has been.
bingo, right? And
Yep.
it's like, well, think about what that really means.
Mhm.
Unburdened by what has been. So we can tear down everything. We can remove the statues. We can get rid of all this crap. It doesn't have to be burdened by all that.
Yeah,
What
and that's
the
straight up
foundation?
Marxism talk.
Oh
That's
my
straight from
God,
Marx.
yes.
Yep. But so this is where I'm going to encourage everybody, and I share your emotions about socialism, Harris, all this stuff.
Yeah.
Put that aside. This with the chart you just brought back up. I'm glad you brought that back up. This is what's going to happen.
Yeah.
I will stand by that.
Demographically, it's unescapable, I would imagine.
That's my opinion. Yes.
Yeah.
And because like you're in Michael's points about Norway oil is subsidized, they'll be like, well, let's do that here.
Mm-hmm.
That'll be their argument. I disagree with that vehemently, but that'll be their argument, right? So, and it sounds really good.
Can I take this into the fracturing of our union?
Please do.
Because that, to me, the red state's going to make. I completely, wholly reject this. This is not the republic we were founded on. You can be unburdened by what has been on the left coast. Not interested in that. So some sort of soft secession, like, yeah, we're not interested in that. Because demographically, in those places, it's going to continue that way. Whereas I think in more conservative areas, there's going to be a rejection of that, even by the young people.
Yeah.
I've got 4 kids and they're in that demographic and not a damn socialist in the bunch,
right there with you.
So I don't know.
But the thing is, it can be bent, and both sides can bend stuff, right? But to Michael's point, yeah, these subsidies, all this stuff, the younger generations, stereotypically speaking, are bending that way. And it sounds really good on paper. And I can actually tell you when, I mean, I was young. I was like maybe 12. I'm kind of making that up, but I know I was really young. And I remember thinking one time, wow, if everybody just gave me $1, I'd be rich. And then I remember thinking, well, hold on, I'd have to give $1 to everybody else. That doesn't work. And I was like 12 or 13, right? I mean, I remember I was very young. And that was kind of when I had my epiphany of, okay, this isn't going to work. And then I probably went back to skateboarding or whatever I was doing, right? But that's what it is. Socialism works great as long as there's other people giving you money. But when you have to give other people money, suddenly it ain't so great.
Right.
So,
what is that book? There's a French book that came out in the early 70s, Camp of the Saints or something like that. Are you familiar with what I'm talking about?
No, I'm familiar with
that. Let's see here. I'm trying to find. Yeah, the Camp of the Saints. And there's a prophetic line in that book. And it says something like, because it's talking about mass immigration into Europe. Like, this is the future of Europe. They're going to come by the boatloads and they're going to take advantage of your liberal policies and you're going to be destroyed from the inside. And at the time, it's like, how dare you? And it's been proven pretty prophetic. But he's got a line in there where he says, they will roast rats over your eternal flames of the unknown soldier and stuff like this. Well, that recently happened. There was a sub-Saharan African migrant who's got a rat on a spit, and he's literally, you could find this video out there, roasting a rat on the street over the flame of their World War I monument in, I think, Belgium. And it's so, I mean, it's going to happen eventually. I think it's to your point, like, if this continues, it's just you cannot beat demographics. You just can't.
You can't. And the sad part for those of us who are aware of it and study it is you watch the slow motion train wreck for years, right? How long does it take to make an 18-year-old, right? That's demographics. Right. It's that slow, right? Yep. But the upside of that is you also have a lot of years to prepare and be ready.
Yes.
So that's what we're trying to accomplish here is prepare and be ready and prepare your family members, specifically talk to your younger family members. This is what's going to happen. This is what's coming. And you can't really stop. I mean, look at So here's one for you. So we I'll preview one of the slides for next week because in doing this show and trying to keep it under 4 hours, I've already got next week's show done. Okay. And part of it is birth rates. And it's a
Mhm.
worldwide chart. Need about 2.1 births per female identifying person. Okay.
Yes.
To maintain a population. Right now, the US is at 1.6.
Oh yeah.
We have to have either immigration to have a workforce or have enough AI and robotics come along so that a smaller workforce can be sufficiently productive. Okay.
Let's do what we did in the early 20th century. You favor immigration from people that want to flee Europe.
I couldn't agree
You know
more.
what I mean? It's like, oh, you're from a Northwestern European country and you have, you want to take your money and get the hell out of there because of social programs for the illegal immigrants. Come to
Yeah.
Ellis Island, we'll reopen it. But if you're not, you're not contributing, you're mentally ill, you're a drug addict,
Mhm. Yep. I
we don't
agree.
need you.
So I agree. Controlled immigration, I think, is what you're getting at.
Yes.
Right.
Yes.
So a controlled immigration. And let's use, I'm a fan of Canada's immigration policy. I'm a
Which is,
big fan of it. It
what is
says
it?
you have to show you're financially viable and you will add something to society. You have to show it. Nobody likes to talk
Most
about
countries
that,
are that way, Will. I mean,
right? Yeah.
when I was getting ready to retire, I was looking at leaving the country because I could see where this mess was heading, and
Yep.
here we are.
Yep.
And I was looking at New Zealand, and they have a calculator. You can go in there and plug in your variables. I'm this educated. I have these skills. That I speak these languages, and it spits out a number.
Hmm.
And I think my number was 70 something. And to be, you need 100 to get in.
Okay. Okay.
And the higher you are, like 140, let's say, because they need, let's say they need neurosurgeons. So
Hmm.
you may click neurosurgeon and automatically they give you a 120. Come on in, right?
Hmm.
We should do the same damn thing, which is probably similar to Canada, I would imagine.
I don't know if there's actually a calculator for Canada, but you have to show it. And
Mm-hmm.
you know, and to Will Parker's point, inviting those who will never assimilate, you know, the that becomes a net drain on society, the people who don't contribute, right? And that's the difference between the immigration we see, a lot of the immigration we see now versus the classical immigration into Ellis Island. There were no social safety nets to use as hammocks back then. They had to
Mm-hmm.
work. Okay. So therefore they by default became productive members of society because they like to eat 3 times a day.
Mm-hmm.
Well, that's not the case anymore. So it's apples to oranges comparison in many of these cases. And this is what we need to figure out as a country because we're going to need net immigration or we're going to have to go through a industrial revolution, if you will, with AI and robotics. And I don't know if that can happen fast enough, but the controlled immigration that brings the right people in and they become Americans.
Yeah, Dan says many European countries need to see financial viability. And he's absolutely right. I've looked at, I think it's the D7 visa for Portugal. Looked at several different. I wouldn't mind having a secondary passport just in case things get really weird here. But then I'll segue and say, well, Gerald has a great point. Now that I have grandchildren or a
Mhm.
grandchild and my father's health is wrecked, it's kind of, I can't just jump when I want to jump.
Yeah.
But yeah, they want to see financial viability. You got to open a bank account in that country. It has to have so much
Mhm.
in it for so long. And then they want to look at your bank records but if you're coming from sub-Saharan Africa or the Middle East, then there's nothing. Come on in. Like,
Yep.
how does that make any sense?
It doesn't.
Mm-mm.
It
No,
doesn't. But I'll
it's
bet you I know which way
unsustainable.
they're going to vote.
Yeah.
Yep.
This was
What's
a
this
great
one say?
quote. I read this, man. The old world is dying and the new world struggles to be born. Now is the time of monsters. Man, love that.
Yep. And sadly, I mean, it's not going to play out this week, this month, this year, probably not even next year without some sort of catalyst. But we're in the fourth turning, guys, and it's going to take years to play out. It's between now and 2030. You're looking at basically 4 years, 4 more years, and it's going to get worse before it gets better.
Yeah.
So don't know what that's going to look like for sure, but we'll be here every week trying to see over the horizon and see what's out there, and how to there's like the course you're teaching, the HREC course. There's that side of it. There's this side of it. Next week we're going to talk some demographic stuff, talk that birth rate stuff. And also going to talk one more stock market indicator next week. And we'll keep chunking it out there, guys. But it's you know, it's going to happen. It happens to every society that's around long enough. And
What's the cycle time? 250 years?
ish,
What's
yeah.
next year? Our
Hmm.
250th.
Wow, funny how that works.
And that's what this
So,
Monday show is. I don't mean to say exactly what you said, but helping you navigate the end of the American empire, whether it happens now
right.
or 70 years from now, but we are on that downward slope.
Yep.
And that's not just Rich Brown's opinion, man. Read Ray Dalio's book or any of these other things that are out
Mhm.
there. The
Yeah.
history, what do you say, Will? History doesn't.
Doesn't repeat, but it rhymes. And
There you go.
and to your point, and I know you know this. I just want to make sure
Please.
anybody who's watching later or whatever, we don't do fear mongering. Oh, it's the end of the American Empire. Buy gold, silver, ammo, all that sort of stuff. The point is that it's going to happen, right? It's not going to happen. I don't see it in the next 5 to 10 years because there has to be a viable alternative to switch to. And right now, there is no viable alternative. So until there's a viable alternative, it's going to remain the American dollar and the American empire.
Did you see what the I guess some Russian finance minister said that the Americans were getting ready to put it all in Bitcoin or something like that, doing a reset to Bitcoin? That came out over the weekend.
Oh, really?
He's acting like he knows, he knows something we don't, but we'll see. Jeff says,
Yeah.
what about the gun bans in Canada? What is the deal with that? Yeah. Well, there's gun
Well,
bans everywhere, buddy. That's why
yeah.
we have to fight for what we have now, because the
Yep.
world is pretty much, at least the West, is gone.
Yeah.
We're the
And
last. I mean, I don't. That sounds melodramatic. Oh, we're the last bastion of freedom, but tell me
yeah.
somewhere else that's more free than us.
Yeah. And the other area I'm looking at is France. They have some very serious. They have their demographic immigration problems. Very severe problems there. They also have some big time uh, government finance problems. They're drowning in debt. Their social programs have been inundated with this mass migration they've allowed to happen, and those folks have, to use steal Rush Limbaugh's term from back in the day, they're using the safety net as a hammock.
That's right.
So, and Europe is having, overall, but specifically France having some big issues with this. So
Humans respond to incentives. I mean, this is
Yep.
human nature 101. And if the incentive is, as long as you don't have a job, I'm going to send you $4,500 a month. Now, the minute
Yeah.
you get a job, that check ends and you're on your own. Like, well, then why get a job?
Well, and this is very dated. I'm going to say this goes back to maybe 2011. But I saw a study. I remember it was on Zero Hedge. Took a hypothetical single mom of 2, I believe it was, in a big city. I forget which state. And basically, if she went out and got a job, it was going to have to pay like $65,000 a year in that 2011, 2012 dollars to make up for the social safety net that she was living off of.
Mm.
By the time you factored in, a reasonable amount for, car, clothing, work clothing, things like that. Well, I mean, that person is going to respond to those incentives, right? I mean, and it's hard to really blame them, right? I mean, it's easy to blame them from the standpoint of I want to work, I want to get further ahead than that. But if it's a single mom with 2 young kids, you got to take care of your today problem sometimes.
Yeah.
So was Dr. Fuller say there?
Well, Dan says this is part of the reason why France is caving into the Islamists. Yeah. They're partly it's caving in due to demographics. Even though they're a drain, I mean, they're a voting bloc, and they control certain areas with Sharia law. I mean, it's just insane. Dr. Fuller says it's sad to see Europe collapsing because of the completely predictable results of their own decisions, and he clarifies that. Yeah,
And
imagine that. Completely predictable.
Point, here, bear with me 1 second because I got to find this on my phone. Because actually, I think I sent it to. Yeah, actually, Dr. Fuller sent it out. He just paraphrased his own.
Over the weekend.
I'm making a shirt of this today for myself. I'm very sorry to hear that the direct and predictable results of your actions happen to you.
Exactly.
Like, yep, that'd be about it. And that's what's happening all over Europe. People called for it when it started happening. They went, "Oh, you're just a right wing, blah blah blah." Went, "Nope, just wait." But again, it's like the COVID checks and the inflation. The lag is so long in between there that the low information voter, to steal Rush Limbaugh's term again, they don't see the correlation because it takes so long in between. Just like there's people who don't think the COVID checks caused the inflation.
Like going back to your slide about, and I guess we can kind of close. We kept people on here for an hour and 35 minutes. But the deep subprime guys that have a credit score like 500 to 550 or 601 or whatever it was, you got to work to get a FICO score that damn low.
Yeah.
I mean, you got to like, I'm not going to pay my bills. I'm going to jump around jobs.
You got to get darn good at irresponsibility.
Exactly.
You can't just be like hobby good at irresponsibility. You got to be like professional good.
Right. So it's like the predictable results are now that you have a car loan, edging up to 29% and you're drowning and you're not going to make it out and you're going to continue to drown. And I'm sorry,
Yeah.
Michael says the Great Society and the immigration subsidies are just payoffs for potential votes. Yeah. Tammany did the same thing with the Irish, right?
Yep. And LBJ came out, I mean, famously said it. I won't use the language he did.
Please don't.
But he just, I won't. He came out and said, they'll vote for us forever. He was right.
They being the African American community. And guess what? Here we are 60 years later, and he's absolutely right.
Yeah.
And I would submit that it didn't strengthen the Black community in the United States. It destroyed them, incentivized broken families. Whereas the African American prior to 1964 Civil Rights Act, they had, was it like 80% of the children being born were born to a house with a mother and a father, just like white families. After the Civil Rights Act, now it's 20%, 80%, 20% of children born into a intact mother and father nuclear family. So how was this a good idea for anybody? It wasn't, but they secured the votes. So there you go.
It was a good idea for that.
Yes, sir.
And that's what they cared about, right?
Yeah.
So with that, how about you take us out there, brother?
Absolutely. Let's go ahead and do that. Thanks for being on today's show, guys and gals. Thank you to my good friend, Mr. Will, for putting all this amazing information together. Please take action on it, because without action, information is just entertainment. So be safe. And until then, the fight is coming. Be ready.